Today is FOMC. We've got a lot of news today. I didn't even look at the whole list. Let's take a look. All this stuff. We've got 8:15 and 9:45, 10 a.m. And obviously the big ones later today. We have 8:30 on Thursday and then P on Friday. So today is going to be a very, very chill day. We do have a 15-minute imbalance actually below, so that's just watching for price to go from external to internal in discount if we wanted to reach all the way down there. Otherwise, I probably will not be trading. I will not be trading today. Just kind of just watching it and chilling here. I decided to take the poll yesterday and I think everyone voted the same thing. So here we are. So if you got any questions, backtesting topics, psychology questions, all that kind of stuff, we'll just treat this as a normal backtesting / Q&A stream. It'll still be posted and uploaded to YouTube as well. I still need to go over yesterday's example and I'll send it into the models and reviews. I'll do those probably for the low probability days. I'll post the notion and stuff into the models and reviews chat. But so far we are holding this bearish order block. I'm watching to see how this should be the last pump up and tag. Got this for value up here too. So it's on FOMC, if you're new to ICT concepts, there's 3 news drivers where you really don't want to be trading because there's something called a seek and destroy profile, where basically the algorithm will generate liquidity, take it on both sides, generate liquidity, take it on both sides, and it's a very rough and annoying profile to trade. This is typically what you see as your broadening formation, and for ICT trading, this is most times extremely difficult to be on sides with because a lot of PD rates will be disrespected and then they'll randomly reverse and go the other way. So it's best to just avoid these kind of days and just sit out. And if you can have the disciplines and patience and understanding that there will be a setup later this week, even later today, if you look to trade after 2:30, it's very relaxing and I don't know, you just feel confident that you don't have to trade every single session. So today's an example of that. I don't even have my other screen pulled up with anything. Can you go over what price action does at certain times? I still don't really understand why 8:30 high and low and what to look for when it's 9:30, 10 a.m. and 11. Yeah. So the first thing I would say is if you haven't read the PDF or if you want to pull it up at that same time, here is the link to the Q&A post for that specific PDF. And it should be, yeah, the first PDF if you scroll up. So the time-based stuff is all based on, it's really just based on what you're expecting in price. And if you go to the core content with 10, he shows the different profiles, but he doesn't show the times that they format. It's not this is what happens every single time. Obviously, it's going to be just a general wide-ranging framework that sometimes you look for, and you can frame trade setups based on that. The most important one to look for, and the one that happens the most, is between 10:30 and 11. You have, well, technically between 10:30 and 12 on Forex, you call that London close. And London close on a Forex pair normally creates the higher low of the session, and London open creates the lower high of the session, right? So your normal daily profile on a Forex pair, if you go to Euro USD, go to something like the 15-minute chart, London low, putting in the low in this case, and then you'll probably see this high taken out between 10:30 and 12. Okay, and you can go back and study how many times this occurs, and a lot of times on high probability days, this is the whole framework that ICT trading is framed on. No audio. Oh, you may have to restart. Or can everyone hear me? I hope everyone can hear me. Okay, thank you. So with London close on Forex in mind, that same kind of, not the same exact phenomena happens on indices, but very similar, where you can get that low put in between 2 to 5, and very occasionally, just for the AM session between midnight and 10:30, you get that high put in. So for the AM session, the one that happens the most is between 10:30 and 11. You'll have your high or low of the session put in, right? So if you're bearish, you want to see the low put in between 10:30 and 11. Bullish, other way around. That's the most important time element that you can rely on most times to hold a position to, is time, right? 10:30 to 11. Now, in between that, you have the different factors. They may set up the profile for the 10:30 to 11 time frame. So if we have a no news day, for example, and we're bearish, right? Then the time element, well, every single morning session will be framed on a open high low close or open low high close, right? There's your power of 3. So open, high, low, close, or the other way around, right? Open, low, high, close. So if you have these two in mind, these are the only two profiles it can do, then you start pairing in time and price and the market maker models, which is really what I do subconsciously. I probably don't mention it. I should. So on a time profile, if we were bearish, right? Say we had 9:30 open, which is a time, then you have a high, low, you're close. So if we're expecting our low down here to be put in between 10:30 to 11, right? It's not solidified. It's just what you're targeting. Then the high should be put in between, assuming there's no news on this day, 9:30 to 10. Now, even on regular news days, you can still see this profile. If you go back to 8:30 news from last week, you saw this same exact thing happen, right? So 9:30 to 10, 10:30 to 11. Now you start putting in the price elements. So what do you want to see? Well, up top, you want to see either an IRL or ERL. We'll say an ERL in this case. London high, what are you going to be targeting? Well, you're going to have your IRL and some form of it hitting at 10:30. Then you start adding the market maker sell model framework. So every single morning session, there's going to be either a market maker buy model or a market maker sell model. And it's either going to be on a lower time frame or higher time frame. So meaning if it's on a higher time frame, this is what you'll see for the morning session. Like it could just go like this, and this is all you see. And you're like, okay, how is that a market maker model? Maybe there's nothing on the left side you can use. It's because if you go to a higher time frame, it may be just continuing that higher time frame, like an hourly or a 15-minute trend, and it's just completing the market maker buy model on maybe the hourly chart, right? So you're not gonna. It may be just this whole section, so you can't see the rest of it unless you zoom out. That's why it's so important that you do a top-down analysis in the morning, so you get kind of adjusted to where we are on both a higher time frame aspect and a lower time frame aspect. Now, if we're on a lower time frame, you'll see the market maker model pretty easily, right? You'll see probably original consolidation or something down here, first stage, second stage. Then you have time where Judah swings, breaks down, and then this is why you want to wait normally for the first 15-minute candle to finish its Judah swing. You could see something like this at 9:30 where it dips lower, then trades up, and then it continues this move. That's why you want to wait normally. And then you either hunt the 950 macro or between 9:45 and 9:30. Sorry, 9:45 and really 10:15. You want to find an entry either with the breaker or into premium, and you can short that and look for either a time element or obviously for your PD rate to be hit, or a combination of both. So in this case, it's pretty obvious that we have this kind of same framework here, right? We have the London high being taken. We have a drop down in price, market structure shift for value gap here. It's a reclaim for value gap, trades up into it. And now we're looking for this IRL down here, which is present on the 15-minute chart. Okay, so we're going from buy side, it needs to go to discount. So you're going to take your most current dealing range between low and high. This for value gap is in premium. This for value gap is now in discount. So that's the target for the morning that I have pulled. Now I'm not going to be trading it, but you get the framework, right? Now this could also flip. This could be an IRL in premium, If this is an IRL and premium, you're going to be targeting your sell side liquidity in the form of a time-based ERL. So it could be London low, Asian low, previous day low, all that kind of time-based stuff is going to be your optimal target. Now for 8:30 news, you're going to have the same kind of profile, but you can also shift it back sometimes. So you could see something like this where 8:30 to 9 creates the high. Maybe you have a news sweep or something. Comes down to 9:30 to 10. Creates the low. And you could be trading the 850 macro the same way you would use the ATM model and all that kind of stuff. Or if you understand this, then you could look at, okay, if this is the low, then you could see the 9:30 to 10 o'clock create the low for the next leg, which then is the 10:30 to 11, putting the high of a market maker buy model just in that framework, which is what you saw last Thursday and Friday, I believe. The way you can use this is really just, I like to just use the 9:30 to 10. I'm not using this one a whole lot. But if you see say 9 o'clock is already printed, and you see that price is then doing something like this, where you have this, say this is all 8:30 to 9 o'clock. So price is coming up, 8:30 creates the high, then here's 9 o'clock, right? So right here is where you'd be looking, okay, we have a high here, and we have a low here. Well, if you see price then at 9:10 or something, maybe 9:15, trade up into a fair value gap, and then at 9:15 it pierces it, you now understand that, okay, the time elements show me that this is most likely to be the high because we just already made a new low outside of the time window. So we are going to continue to trade lower up until the next time element, which would be 9:30 to 10. Most times it's right at 9:30. And you can make a framework out of that. Same thing with the 10:30 one, which is a lot of times what you'll see me use on stream, where if we put in a high at the wrong time, say we're bullish, we get our 9:30 sweep of ERL, we start trading up, you get something like this. So this would be 9:30. We have maybe an ERL down here, London low. And we're targeting maybe an IRL up here. Now we may have already traded into this fair value gap, and maybe this is 10:15. Now there's going to be scenarios where obviously this is the high and it's just left as that, but what you can normally assume is you'll have another leg up as long as we're dipping into discount here. Hold up. As long as we're dipping into discount here, you'll see that this high will be taken one last time and it'll be put in at the right time, so 10:30. And you can have a whole framework just based on this, where you have a market maker buy model right in here from the retracement leg down to discount, and then the buy side of the curve back up to the 10:15 high, and look for a deeper trade into the IRL, or even if the 10:15 missed it, you can trust that it will hold into there. So that's just a lot of, it's a framework. It doesn't mean it's going to happen every day, but a lot of times it's helpful. The most important one is for sure is the 10:30 to 11. If you can understand that most times the trend will end around there and you want to get in before that, it's good for holding positions, and especially if you have runners, just trusting that the time element, even if you got your target met, maybe there's another leg that'll continue to push us lower. But every single morning session will frame the same thing. It'll be open, high, low, close, open, low, high, close, and there's going to be a market maker model every single day. So, I mean, as soon as you come to the chart over here, right, if you see that this is starting to build, I would assume that now, okay, we have a buy side of the curve. We're going to form a sell side of the curve, and then you start putting in the price labels. That's why it's so important to journal what you see every day, because that same exact stuff happens every morning. Was yesterday an example of consolidating silver bullet? So 1050 to 1110 macro had been high probability. I would agree. I would say, yeah. If you go back, beautiful drop lower, and we had a nice IO Fed entry. I think on the 2-minute there was one in here, but or multiple order block opportunities. But yeah, I agree. That's probably the only time that 1150 or the 1050 macro is solid. Could you share your kill zone indicator? Yeah. Which one? This top one or the bottom one? Hopefully you can already see how choppy the price action is over here. Tiny for value up in here. Yeah, I got you. Nothing below that either. For today's price reading, we can say that prior to 950, we have a consolidation and a fair value gap that held price. We can expect that fair value gap or order block to lead to an expansion. Yes, I would assume so. This kind of consolidation, normally you'd like to see a Judah swing above it. I guess we have the 3 drives pattern right here, 1, 2, 3, into the fair value gap, filling it completely now. So you could look at that as the Judah swing, but yeah, we're getting some expansion now, lower, holding this order block too. Don't feel rushed to get into price. If you're sitting there staring at it with your finger over the buy sell of the sell button right now, just let it happen. Let it run all the way down to the target. You can actually trim this target down to probably here, but we'll keep it there for now. Actually, I'm gonna outline a little bit more. So whenever you have a fair value up like this, that's partially filled with candle bodies. I'm not talking wicks, just the candle bodies. You can trim it to where the buying and the selling both stop. And that's normally right around 50% of the range. And you won't see it just tap right here. It'll come down and reach further into the gap. I mean, even in here, right, you can see the market maker sell model with the consolidation low down here. This is not time-based, but you get the idea. Don't think we had any SMT either. Oh, we did. We had SMT at 930 between ES and NASDAQ. Right in here. Look at that 930 high, making a higher high on ES and NASDAQ creating a lower high, failing to sweep it. Let's go to ES, you'll see right in there. Yep. Huge run up there. Nice OG console down here too. There's a post. Was it yesterday? Yeah, yesterday. About a market maker model. I'll make a whole probably hour-long video covering what I look for in market maker models. There's a bunch of content out there on market maker models already. So if you want the whole technical aspect of using standard deviations and finding, where the silver bullet zone is and all that good juicy stuff, I'm not going to really cover that in the video. It'll be more of what to look for visually, and how to anticipate certain things within the market maker model. Obviously, how to trade it with a time-based perspective too. But the most standard one I already gave you, right? Open, high, low, close. Open, low, high, close. Market maker model starting at 930. So most high quality entries will be 930 creates the reversal, or 830 creates the reversal, and 930 will continue. Meaning that we already in pre-market had traded multiple times. There's your 10 a.m. news, by the way, too. I'm actually more concerned with this order block here. Order block with the fair value gap. I want to treat this as inversion too. Should just trade it through that. There we go. I don't know what I was saying now. All right, 930 will create the reversal pattern. There is your IRL target. Screenshot and study it. Now, some people probably say, yo, this is tradable. Like, I can see the clear setup, the clear entry. But there's going to be days, you'll realize, even for news days or non-news days, stuff like this will happen, right? If you look at your model, there's going to be times where you see a really, really nice entry, maybe in the PM session or on an entry that happens before the 950 macro, a future of the 950 macro. And you have to have and develop the discipline to just sit it out. And it's very, very difficult in the beginning because it feels like, oh, if I miss this, then I'm missing out on an opportunity to get out of my drawdown or to pass my eval or, to get my first payout. All that stuff, all those kind of thoughts will eventually lead to you pressing the button and, something bad will happen. Either you take a loss when you didn't need to, or even worse. So when you understand that your rules there are to protect you and not to constrict your trading, then you really can succeed. Because there'd be times where, yeah, like today's FOMC probably could have shorted that gap or that gap and be able to get in for a nice, what is that, like 34, 40 points. But 90% of the other times that we have FOMC, it's going to be, oh, there's that same entry. You get in short and then you have to take a 30-point loss. You're like, okay, why did I trade on that day? So you're going to miss opportunities, but they're not even really opportunities if they don't follow your rules, right? So if this framework was in your model, then sure. But you need to be very careful in trading low probability days because they're low probability days for a reason. You learn to you only need, 1 to 2 different setups per week. And that's your whole goal. Whatever your goal was, you could probably make that in 1 to 2 days if you're managing risk properly and taking A+ setups. So there was someone I was talking to yesterday talking about a daily goal, which is what I had in the very beginning as well. Daily goals are great, I think, when you're very later on in your trading. A daily goal in the beginning is hard because you set expectations every day to reach that goal. And if you don't reach it, or if you're close to it, you either will hold trades longer than you need to, or you'll overtrade trying to reach that goal. So if you have a daily goal, it's not something bad. It's not a bad practice, but I would say if you could frame it more for a weekly goal or even a monthly goal, it's much easier on your mental load to go, okay, if I take a loss today, I have this entire week, maybe 4 more days to attack my weekly goal. So if I maybe lose 1% on, it's kind of a high, we'll say 0.5% on Monday, I have Tuesday, Wednesday, Thursday, Friday to make back that 0.5% plus whatever my weekly goal is. That's why I say the weekly target should be 50 points, not the daily target is 10 points or 20 points. I think it's just, so make the tax on your mental capacity the least it can be outside of pushing the button. Because pushing the button and managing a position and managing drawdown is already very taxing. Just make sure that everything else is smooth sailing and submit to the element of time. So if you're trying to pass an evaluation in a week and you haven't done it before consistently, it's not an unrealistic goal when you know what you're doing, but in the beginning, it's very, very difficult to do that. And normally it'll take longer than what it should. If you just had wait, the 2 to 3 weeks it probably could have taken. So if you look to target 30 to maybe 50% of your say you're trading an evaluation, 30 to 50% of your profit target in an eval per week. I think that's a achievable result, but it's not too far where it's unreasonable, and it's not too close where um, you'll find yourself over trading or maybe just taking stupid setups just to pass it in one day. That means you take about 2 to 3 weeks to pass an eval, which I think is plenty of time. And if you just submit to that idea, okay, I have to stay disciplined for 2 to 3 weeks, then I'll be in a position that I've been wanting to be in for so long. It'll be much easier than if you just keep on trying to rush it, fail it, keep trying to rush it, fail it, keep trying to rush it, fail it. So we're reacting off this lower IRL here, which is, you can see even on the 10 a.m. news, we dipped down into that zone. So if you're not marking out the targets like this, I think you should start doing it. It's not really, I don't think ICT has spoken about it a lot, but this is where you want to be drawing in. Oh, actually, we have a new week, new day opening gap. Pretty large one. And you can find that this works on every time frame, but especially on your higher time frames, 15-minute, hourly. Turtle soup goat back at it. Nice. Can you explain when you expect New York AM trends and how to hold for those higher targets? Yeah, so a whole trend of the New York session is pretty rare. Like, very rarely do you get a framework where you see maybe 930 fails to create a Judas and it just expands up, or maybe you have a slight Judas at 930 where it's not even noticeable unless you really, really dig for the SMT, and then it expands all the way up. So it's good to understand that these days rarely happen, maybe once a week max, maybe once every 2 weeks. I would assume it's there. Now, the way you can anticipate these and expect them and how to hold for the higher target is these continuation profiles will always be from a higher time frame. It'll never be a lower time frame move. It'll always be, okay, we're either in the second stage of, most times it's in the second stage of distribution or accumulation in the market maker models. So if on a higher time frame, we're in this aspect of price, this little section where it's the last retracement maybe happened during London and we see continuation. This will happen a lot of times where you have this kind of profile. It just runs aggressively. Same thing if you flip it upside down, or if there's a news driver and we have to get somewhere quickly, like a weekly target. Now, if you see, this is where time comes in. So if you're very unsure, you're being very patient, can't speak, and you see, okay, we maybe have a slight SMT at the bottom and we're continuing to go up, and 10 a.m. is now put in, and we see a pierce of 10 a.m. As long as the higher time frame makes sense and we're on a high probability day, what then can you expect? If this was supposed to be the high, we wouldn't have taken it already. If this is the low, we would have left it like this. So now you can assume that the AM low has been put in, and you can either find a opportunity within the last 10 minutes of the macro to go long off fair value gap, or you just wait really for any retracement and wait till time, till 10:30 to 11 o'clock. Now, intraday, when you don't have a continuation profile, well, first of all, understand that everything is either a continuation or reversal for every single session, right? New York is either a continuation of the London move or a reversal of it. London is a reversal or a continuation of Asian. So when you understand that first, it's easier just to look for two profiles. For the AM session, when we just have a reversal signature, your standard kind of New York session, the way you can hold it is, it sounds dumb, but by just taking screenshots of old pictures. If you go in every day, screenshot it, and then you have a data set of, you're looking at it every day of, here's where it ended at 10:30, here's where it ended at 10:26, here's where it ended at 10:40, here's where it ended at 11. You develop a subconscious confidence that now I can hold longer because I've seen it so many times in my own handwriting or in my own journaling. Like if I show it to you, it's not going to mean as much as if you're doing it. So a lot of times holding for further targets is outside of the charts in your own back testing and journaling and things like that. And it's just the way you can do it while you're actually trading in demo is by, if you have runners and partials, say you had something like a 10 mini, 1 mini, and you want to flip it to 10 micros. Maybe you take 9 contracts off at whatever your target was, and you leave 1 micro on, and then put your stop to either break even or even slightly in a loss, wherever it makes sense to put your stop. And you just leave it. You don't touch it. It's 1 micro out of the 10. What's the most it can do, right? Either it comes back and stops you at a break even, and you missed out maybe on 40 points on a micro, or it runs all the way to your target. And those small increments of lifting the weight further and further and further will help you then hold larger positions even further, right? So if you can slowly either hold it for 20 points, then 30 points, then 40 points, then 50 points, and you may get stopped out, and it's going to be uncomfortable when you get stopped out at 40 points, and you're like, oh, I could have just taken it off at 30. And that's part of it. But then when you develop that, it'll pay off in the long run, because then you're able to hold a 50-point run, not be mad if it gets stopped out, when you could barely hold over maybe a 20-point run beforehand. So I think it's well worth the investment of, it may take you a little bit of time and you may take some losses that then provide this mentality of, oh, I could have just taken it off here and got my profit. Why did I do that? And that's the uncomfortable part of trading, is building the threshold of how long you can sit in the uncomfortability. Like, being in a trade is all uncertainty, and it's just extremely uncomfortable. That's why you have that urge to just close it out. As soon as you see that profit, you want to close it out. And as soon as you get in that loss, if you don't have a stop loss, like think back when you either first started trading or you didn't have a stop loss, which hopefully you're using one now, where you would go into drawdown and you would hold it for really, really long. But then as soon as you got runners that were winning, you would close it out as soon as you saw the green. And that's just because your brain doesn't like being uncomfortable when you're up, but it creates this false sense of hope when you're down, that it will come back, which sometimes it doesn't, right? Yeah, no stop loss for infinite RR. Plus, if you YOLO with no stop loss, that's the dynamic duo there. Infinite bread. So we're trading down below the sell side. We have the sell side target down here too. Not a time-based one, but 632 low or so. Nice. Is that a 1 minute trade with the 10? That's pretty solid. In and out within 1 minute. That's beautiful. You can see the news here. See how it didn't really change price action at all? It just accelerated what was already happening. We already had the downtrend. It was already holding bearish PD arrays, but it just came up, gave an entry to the fair value gap. Did we trade above the order block? We missed it by a tick. So barely missed the order block high by a tick. That's where you would have your stop, right? Even here would be fine. And then runs down to target. And this is normally what you see on the E30 news, just zoomed in more. So we've already reached discount. We've already reached our sell side target and our IRL. You would expect prices now going to retrace into a premium, short-term premium. We don't have any gaps above really, besides this reclaim gap. You could actually see it retrace all the way up into here, which would be kind of rough if you're trailing a stop. Previous week low, how far is that? Oh yeah. But Thursday, yeah. Market maker some out there in the hourly. I guarantee you, not guarantee, but look how this is the second stage of distribution in the market maker sum or accumulation. I don't know. I need to get that down. But look at this as a market maker sell model framework. We do have a fair value gap up here, which I'm curious to see if we run into that. But you would assume that I actually would like if we ran into this gap before taking out the sell side, to be honest, because we haven't had a stop run on the first stage, the low risk sell, or the second stage yet. So it makes sense if maybe FOMC popped up into this gap and then traded all the way down, which is not impossible for FOMC. Like this is, how far is this? 160 points up and then back down 170 points. Very, very possible. If you decide to trade the PM session for whatever reason, if that's your model, only if that's your model, you want to look for after 2:30 or 14:30 Eastern Standard Time. A lot of times there's a lot of volatility between 2 o'clock and 2:30 that's unreadable. A lot of manual intervention, manipulation where there's no regard for the algorithm at all. So wait till 2:30 and 2:30, sometimes even the 3:15 to 3:45 macro will have a nice run towards the untapped liquidity or the relative equal lows that are put in by the news. Yeah, two stage. So the first 30 minutes, or even the first, I would say the first 30 minutes is just a lot of just up and down, 300 points up, 300 points down. Don't touch that. Then after 2:30, there's your real move or your real couple of moves. Usually on low probability days, I will only enter in on halfway into the order block. Also, we went into premium stop loss was above the 951 candle. Yeah, I think that's a good setup. I think on any low probability day, whether it's FOMC or prior to an 8:30 news driver, using half size and using further entries is preferred, right? Like a further premium entry or further discount entry instead of just right? Because if we are on a higher time frame or even a lower time frame expected to expand, you'll get very slight entries into discount. And these are the ones you want to be trading, right? As soon as it drops into discount, there's a fair value gap there and it runs aggressively. Now, in a low probability day, what you can see is either a deep retracement where you can get stopped out and then it removes, or you get multiple stop runs as we continue to climb up. So you'll get maybe a move up like this, creates a low, stop run, stop run, stop run, like that. That's high resistance liquidity. Similar to this, although we didn't have a lot of stop runs on the way down. It's just very slow and back and forth. It's very hard to trail stops on a move like this. Yeah, I normally would not touch that at all. Now, tomorrow is most likely going to be problematic as well. We have a large expansion day today. So what comes after expansion most times in higher time frames? Consolidation. So we could have consolidation tomorrow. Plus we have NFP on Friday. Only thing that would make sense of why we may move from 8:30 to 9:30 is we have 8:30 news tomorrow. So you could look, I guess, still probably have a stream, a quick stream, something like this. You could look between maybe 8:30 and 9:30, or even 9:30 and 10 o'clock. Anything after 10 o'clock, it's just choppy, rough. I suggest to just avoid anything after. I mean, for NFP protocol, this is really the last session you could be trading, right? PM session of today, tomorrow entirely, and then pre 8:30 on Friday is all NFP protocol. Would you look at trading London on days and weeks like these, or just sit out entirely? Maybe on a day like today. Thursday, no. Friday, for sure, no. But I really don't look at trading anything outside of London. That's just my own personal rules, though. Or outside of New York. I'm also not going to wake up at 3 in the morning. Yeah, I agree. Notice that anytime NFP and FOMC are on the same week, it's very low probability. That should mean, though, that since this is the first week, you can see this as the monthly Judas swing. We're also in a time where seasonal tendencies are going to start kicking in, and you can see that seasonal tendency to create a low around this time is expected. So if we see one last dip lower this last week, we've already taken out the 20 or 40 day dip to look back from whenever we started the move lower. So you could see us trade back up into the original consolidation now. I find it unlikely we reach down to the January 5th sell side, but we'll have to see. But these seasonal tendencies, if you're looking at something like, hypothetically, a leap option, or even just getting in on your long-term holdings, if you have long-term holdings, understand seasonal tendencies. Like, I think it was back in April, there was a prediction chat that I sent out of we're expected to now dip lower in the next couple weeks. So if you had long-term holdings, you could sell out up here, but that's all more advanced and just not worth it. I don't like long-term unless you're using ICT concepts. Anyways, so chopping around in this IRL, I'd prefer if there's a down closing candle that completely fills this range. So look at this bottom portion. We have 8 minutes left in this candle. There's your return slightly into premium. I don't think there's any gap. Yeah, nothing. I'm liking that turtle soup. That makes sense to me. Finish out the market maker sell model and then create that's the monthly Judas swing lower, and then we continue back up. Now, what you want to be looking for on the daily chart or even the 4-hour chart between ES, NASDAQ, and YM is for a SMT at the lows. So if we see SMT at the lows and one of them takes out a sell side pool and the other doesn't, you can assume that, I mean, we even have SMT here, right? Between this low and this. You can assume that maybe the low has been put in. So much news worldwide, though, it's going to be difficult. Have you heard about New York Stock Exchange changing their times to be open 24 hours? I have. It's not going to change anything because, to be honest, it's already open 24 hours for the most part. And these algorithms are already ran on New York time on a 24-hour scale. So if anything, the public is just understanding what we already know. It won't change anything. There's also a large news event. Doesn't really relate to the markets too much, but we're changing in the US from a T2 settlement date to a T1 settlement date. So meaning it's going to take 1 day for bank funds to settle. I don't know if that's going to have any impact on the algorithm. It may just speed it up. I don't know if it takes place. I know it's supposed to take place in the 1st or 2nd week of May, but it'll only come into effect probably sometime in September. But it already changed to T1. Oh, I see. Yeah, I mean, everything's basically in place for it to be T1, like with all the electronic digital world we're in right now. It's basically instant transfer anyways. They're going to change it to a T0, which will be fully instantaneous. And that's probably when they'll introduce central bank digital currencies and things like that, where there's not going to be any physical money. It'll all just be on your phone, which I assume when we go to T0, that will speed up the algorithm. It won't change anything, but price action hopefully will be more clean, and it may just speed it up where there's going to be larger ranges and things like that. But who knows? I don't really know if it's going to do anything, to be honest. I saw someone ask that question before, if 930 would be anywhere near as volatile. It still will be, because it's right on a time-based scale, right? Like technically, this 9:30, this is not buying and selling pressure. That's opening it up. So the fact that we're open 24 hours a day doesn't mean that the buying and selling pressure is going to be spread out. It just means that, if anything, there's probably going to be even more liquidity that's into the market now from a retail perspective, I guess. News is news, especially, like, you know what I mean? Like, if they're sending it out, there's always a reason why they're sending it out. So I doubt it's really going to change anything. Yeah, I saw in a couple of the European nations, they already implemented a CBDC. So we'll see where that goes the next couple of years. It's probably going to be a mess. Anyways, we'll probably just wrap it up there. Not a whole lot of stuff after this. This low you could see be taken if we're on a nice time scale, but right, that's a 1013 low. If you want to see it ran, then you'll see this actually ran too. But anyways, stream will be posted later today, so if you want to go back and watch that market maker model stuff, I'll try and upload that video by Sunday. I'll record it, upload it, the market maker model video by Sunday. If everything goes well, I'll send the link into YouTube channel list as always, or we could do it as a live stream. Excuse me, as a live stream and then record it like that. Either way. So if there's a stream tomorrow, I will see you guys then. If price action is pretty poor, then we'll just cancel it and go right to Friday. So take care of yourself, stay safe, get outside if you can, enjoy some sunshine. Please do not be touching it between now and 2:30 if you decide to just get off the charts. And after 2:30 should be okay. So I will see you guys soon. Take care.